Hi, folks. Chris Voss here from the ChrisVossShow.com, the ChrisVossShow.com. Hey, we're coming here with another great podcast. We certainly appreciate you guys tuning in. And, of course, we always have the best audience and guests in the world, like the whole world, like the universe. So anyway, we appreciate you guys tuning in, listening all the way to the end. Be sure to refer the show to your friends, neighbors, relatives, dogs, cats, pool boys, mistresses. Get them all in on the show. Have them go to Google Play. Have them go to iTunes and subscribe. You can also go to youtube.com and, of course, see all the podcasts, plus all the wonderful reviews of companies like AT&T, Harman Kardon, JBL, all the stuff we review there, and the new Siberian Husky puppy, Rocky the raccoon, that we just recently took up. All the great videos over there. I mean, if you're not going to watch me, watch the dog, for reals. Anyway, thanks for tuning in, guys. And we have a most excellent guest with us today, Jeff Schechter. And Jeff is part of the high return real estate guys. We'll get into what that is, what it's about, a.k.a. Shecky. He's had the entrepreneur bug of his life. He started his first business right out of college, and over the years has been involved in numerous business ventures. His love for real estate and investing began in the 1980s when he rehabbed 5 of his own residences before the term house hacking even existed. And nowadays, he's bought many properties, sold many properties, and he's an active investor. And now he's helping other people invest as well. Welcome to the show, Jeff. How are you doing, bud?
I'm doing great, Chris. Thanks for having me.
Good, good. Thanks for coming on. I guess we lost Jack Gibson, your co-founder. So I guess, you know, we'll take you. That's good enough, right?
Yeah, I usually can speak for both of us. And if he's not here to defend himself, it's okay.
Uh-oh. We're going to, I guess we should ask for information on Jack. No, I'm just kidding. So anyway, give us your plugs, if you would, Jeff, on the websites where people can look you up and all that good stuff.
Well, very simple. Just like our name, highreturnrealestate.com. Everything about us is right there.
Sounds good. Sounds good. So you guys do kind of an interesting thing in working with investors, buying in properties, managing all that good stuff. Tell us about what you do.
Well, we're a full turnkey service operation. So we're essentially the one go-to source for investors that want to have really high return, good cash flow producing rental properties. But for the most part, they're for investors that live in other areas and are too busy to mess with that stuff themselves. So we do everything from start to finish. We go and acquire the property. We acquire it right. We rehab it to some very strong standards. We have the property inspected. We put a warranty on the property. We get it tenanted and performing, and then we professionally manage it. So essentially all the investors got to do is put their money in, and they are owning a cash income producing property.
There you go. So just, I mean, what type of investors invest with you? You said foreign, of course, but I mean, do they need to buy multiple properties? Are you doing them one at a time, or what sort of person, let's say if I was prospective as to maybe looking for someone to invest, I mean, what would you be looking for in me?
Well, they're really all kinds. I mean, typically first of all, you use the word foreign. I want to clear that up a little bit. Is we have investors all over the world, but I would certainly say the great majority of investors are Americans just living in areas that are more expensive than where we're doing business.
So like San Francisco, that's like a whole other country unto itself.
Yeah, any of those big cities on the coast, and Chicago and New York and LA, and most of our properties are in Indianapolis, and very, very inexpensive to own property here. And it's not just the cost, but the price to rent ratio here is very, very attractive. So that's what drew us to Indy in the first place. But to answer your question more about the profile of an investor is, we sell properties as inexpensively, say, as $45,000 for a little single family home. That's done. Yeah, done, turnkey, rented, right. So it kind of lowers the barrier of entry for a lot of people. And typically the people that are investing with us are people that they want to have a solid investment. They want to have something safe. They're not interested in the roller coaster ride of the stock market. They want to own real property. And so we'll have stuff maybe as high as 70, 75,000 for a nice duplex. but that's about the price range we deal with. So at that price range, as you can imagine, we're going to have some people that want to just buy 1 or 2, and we do have other people that want to buy 10 or 20. And, you know, we deal with everything in between. And so but typically there are people, like I said, they have some disposable income. They want to be smart with their money, but they're also very, very busy. So they don't want to mess with it. And the done for you feature of everything we do is very attractive for them.
Yeah, it sounds like it. And I can really buy a home for as low as $45,000 in Indianapolis.
Yes, you can, and you can buy something that's going to perform and make you a very nice return on your investment. Almost every single. What's that?
Do I have to be a Colts fan if I buy property there?
No, you do not. Most of our, like I said, most of our investors don't live in Indy, so even a lot of people in Indy are not Colts fans. It's tough to be a Colts fan.
There you go. Maybe I'll move there and just be an antagonist and be a Green Bay fan, even though I'm raised.
There you go.
That's something I don't.
Yeah.
So that's pretty amazing, man. Maybe I'll move there. I'm a single guy, and I have a wife and kids. I've got my 2 dogs, and we've moved around since the real estate bust. I got really lucky during the real estate bust where I'd sold my home and moved to Vegas to do real estate investing, and the bust happened, and fortunately I wasn't caught in a home. So since then we've been moving around and having fun. But yeah, I looked at Detroit. I'm like, geez, for a couple months of rent, I can buy me a home in Detroit. But I think there's a whole lot of other stuff that comes with it. So I don't know about that. But wow. And I know Indianapolis is a nice little city too.
Yeah, I moved here a couple of years ago from Austin, Texas, and it was a little bit of a culture shock coming from the South. But Indy has definitely grown on me. I mean, it's definitely a real city, and there's lots of great restaurants and bars and good things to do. And it's a big convention town, and just a lot going on here. Big sports town, obviously, too. I think it gets a little bit of a bad rap because it oftentimes is in the shadow of Chicago. But it's a good town, and it's in a very strategic location, too.
Well, getting rid of that jerk-faced Manning probably helped the city. No, I'm just kidding. I'm just kidding. He was he became my nemesis when he joined the Broncos and got in the Raiders division. And, you know, that was just a suicide run right there. As soon as that happened, I was like, there goes the next however many seasons. So let's talk about some of the different things that you guys want to talk about. When is the best time to invest in real estate? I know a lot of people have come on the show and talked about real estate investing, and, you know, there's the millennials and everyone else. And I think some people think it's either you have to be super rich or super old, or, you know, you've got nothing better to do with your time. You've retired out of your thing. When is the best time to invest in real estate?
I think that depends on what your strategies are, Chris. So, you know, nobody likes to hear the answer to their question saying, well, that depends, but it kind of does. And here's what I mean. So just in real simplistic terms, if you're the kind of person that is looking for, say, something passive like what we do, and you're not that concerned, say, about appreciation, and you just want something that's just a good little ATM machine that you can own and make cash over and over again, then absolutely right now is a great time to invest. However, if you are the kind of person that's looking for a little bit more high risk, and you're wanting to do a flip, or you're looking for some sort of appreciation play, I personally feel like in most major cities across the US, we are nearing the peak of pricing. I mean, we've had an upward run for nearly a decade, and the banks are doing some different stupid things than what they did, you know, the stupid things in 08 and 09. Just, you know, they're stupid. They're just different stupid, but it's a very protected industry, as we know. And I don't think that can necessarily sustain itself forever. So I think, yeah, if you're wanting to do a very simple, straightforward buy and hold, and you can go into the right areas, like, you know, where we are in the Midwest, and get the kind of deal you're looking for, it's a great time to invest. Otherwise, I'm not so sure.
Are you seeing, you know, I have a lot of friends in San Francisco, and the market there is just beyond insane. I'm not even sure there's a word for what's going on there. I've seen Berkeley, UC professors that are getting paid, you know, great wages from the college, and they're living out of their car. Some people are living out of their car Ubering for to do it. Are you guys seeing people moving from the West Coast and abandoning some of the craziness of the real estate prices in California?
Well, I think anywhere that you have really, really high real estate prices and or really high cost of living, that's going to automatically create a migration away from those places. They're not necessarily coming all to Indianapolis. I know that the years that I lived in Austin, for example, we saw an incredible migration of Californians coming from California to Texas. And of course, Texas has gone through quite a bit of growth. But they tend to go places where they can get similar quality of life. And usually they're being driven away by high taxes, because high taxes are typically what drive up costs and prices and things like that. I mean, there's a lot of things, but taxes are usually a big indicator. And so when they're coming from a place like California, which is very high taxation, they're one of the big attractions to anywhere else they go is, what kind of tax am I going to be paying in the next state that I move to? And, you know, whether that's income tax or property tax, it's still a tax.
Yeah, most definitely. I mean, and so do you guys have personal taxes there in the state? I know in Nevada, we don't have personal taxes here. It's one of the reasons I really love the state.
We do. Indiana does have individual income tax. It's not what I would call over the top. I mean, there's a lot of states that are a lot worse. Property taxes here are also very reasonable, but they're even additionally more reasonable, obviously, because values are lower. So when you start off with a lower rate and then you have a lower assessed value, your property taxes are very reasonable. So, you know, it's we're seeing a lot of, and it's not just us, but a lot of these less expensive places to live in the Midwest, you know, Indianapolis, Kansas City, St. Louis, Cincinnati, Cleveland. These are places that are experiencing some really good growth now in the tech sector, because obviously, you know, the internet is sort of this great, you know, leveling the play field. So companies here, like, for example, the tallest building in downtown Indianapolis last year got taken over by Salesforce.com, ironically a San Francisco company. And this is their second biggest installation. And just in the skyscraper that they've got downtown, something like 850 jobs just in that one location. So they know that they can put a worker there. You know, they can pay somebody 60, 70, 80 grand a year there. And even with a little bit of state tax, that can go a really long way. Like, these people can live really nice on that in Indianapolis. Whereas, look at the comment of what you made about the college professor in Berkeley. I mean, they're making double that, and they still got to live out of their car because they're living in Berkeley. So it's just, you know, it's a whole different story here. Like, people can go out and they can buy an inexpensive house or rent a nice apartment. I mean, like, you can live like a human being. You're not just like scrimping and scratching and saving. And, you know, notwithstanding some of the, you know, little bit colder winters that we get up here, it's still it's a great place to live. There's a very, very good quality of life.
And it sounds like it's a good investment when it comes to an upside, because they're buying as low as $45,000. Certainly there's a lot of upside for if prices increase or if it becomes a bit of a market.
Yeah, I mean, yes and no. I mean, we try to be as transparent as possible. I tell investors, like, look, we're not seeing more than maybe a 1 or 2% increase in values over the last few years. So, you know, Indianapolis in general is kind of like the turtle that wins the race. The good news about that is, you know, if you look at the last crash in 08 and 09, when we saw some really wild swings in values in some of the more expensive areas like Florida and California, and seeing like 40 and 50% swings in values, Indianapolis across the board was about a 7.2% drop, and it rebounded, I think, within like 3 years. So, you know, the bumps are much, much smaller here. But again, the wild rides of appreciation are much smaller. And so again, our value is more in creating cash flow and high cash on cash return on your investment than some possible promise of appreciation in the future.
Mm-hmm. But you really want that in a real estate market or a real estate investing, because it's all about the slow go. It's all about making the money. You know, you don't have the extremes of, say, currency investing or cryptocurrency investing, where things are going up and down, all that good stuff. So you want steady slow as it goes. You don't want something that goes through booms and busts and balloons and pops and all that good stuff.
Yeah, I mean, it depends on what your tolerance for risk is. You know, there's certainly an element of risk to what we do. However, I just think it's very, very soft. You know, when a property is, you know, look, sometimes you get better renters than others. Sometimes renters take a little bit better care of a property than another set of renters, right? Some are more stable than others. So there's a little bit of luck of the draw there. But overall, you know, we know we're going to really make money over the long term. And for the most part, we're typically going to make double-digit returns after all expenses. And that's with owning the, you know, the stability of real property. So you know, even if the thing doesn't appreciate one iota, it's still very much a winning formula.
Yeah, you've got write-offs and then income from it, and everything else that you can deal with, your taxes and all that good stuff. So yeah. I mean, with real estate investing, it's slow as you go. I mean, you're not looking to do some sort of crazy Bitcoin stuff or some sort of crazy sort of, huge increase in the market. Although definitely, I remember I lived in Utah when the average home price was about $45,000, and we went through a period that was probably particular to us being so close to California. But we had a thing for a while there where the jobs in California kind of hit the skids in a recession there, and everyone suddenly wanted to move to Utah, and the Californians could come there and literally buy 2 to 3 homes for the price that they could buy a home in California, and that market really took off. And I don't think it's ever gone back to where it was since. So, you know, I don't know what would happen in Indiana. And you're right, the speculation, you can't really speculate or promise investors that there'll be some sort of boom thing. But the other nice thing you have is you don't have to worry about any sort of real drop off with the nice safe market like that, like we had here in Las Vegas during the 2006 era, where just everything went to hell. And we had so many investors that bought so many properties. In fact, they owned most of the properties at the time, that when they gave up all their properties and created what the banks were calling jingle mail at the time, the market fell out of itself, and you had this incredible shadow inventory here in Las Vegas. Yeah. So do you think real estate prices are inflated right now? Do you think there's a bubble, or do you think there's still room for the future? I mean, we've come through, it's taken us, about 10 years to crawl out of the 2006, 2008 bubble that happened in the real estate market with the U.S., and things are starting to really go well. The economy's starting to hum, and of course the Fed's going to change some of that as they increase and ratchet up the interest rates for the cooling of the economy as it hums. How do you feel about that?
Well, you said a lot there. I think there's probably more than one question in there. Sorry. But I it's kind of like what I was alluding to earlier. I feel, and again, look, I'm in the real estate business, but I'm not going to sit here and tell you I'm the world's biggest expert on this stuff. To me, it's just a general feeling. I feel, and this is what we see because of the business that we're in, banks are still doing a lot of stupid things. It's a different set of stupid things than what they were doing, because there was a bunch of regulations that came down after 08 and 09 that, just to sort of appease the public after all the bailouts, to say, okay, well, we have to protect the public, so let's regulate this industry. So now this industry is regulated to a certain extent, but there's quite a bit of leaks and holes left. And it's just one of those industries that, there's no way that the federal government can ever let the banking industry fail, because it would mean the collapse essentially of the entire economy. Yeah. And because we have such a credit-based economy. So there's no way that could ever happen. So they have no risk of really going under. From a good news-making standpoint, there's always going to be a few that get thrown under the bus. But the industry itself is somewhat protected. It just has to be. And
yeah, well, we definitely tested that in 2008.
Oh yeah, yeah. And so I think that we have we're definitely, you know, every time I say this, I get proven wrong, because for the last 2 years I've been saying, yeah, the bubble's coming, and it hasn't. So, you know, we've had about 10 good years of, you know, appreciation, but I don't think it's what we're going to see is going to be this huge, you know, massive blowout like what we saw a decade ago. But I do feel like we're coming in for a correction. And, you know, the correction is just happening again because of some of the silly things banks are doing. And just because, you know, we're getting to a point now where in some markets, prices are escalating at a faster rate than even our obnoxious inflation rate. And
what
so
people can even afford, for that matter, if you're talking about
right. So eventually simple economics start taking over, and you've got supply and demand, and you start going like, well, okay, now this thing went up at, you know, 20% appreciation in a period where inflation was maybe like at 6%, and you start just continue to price more and more and more and more people out of the market. You know, like, you know, you look at certain areas of California. I mean, the only way anybody's going to be able to own a property there is if they're one of the ultra wealthy. And
yeah, it's definitely a lot of people are leaving California. I know that it's harder there. I know. I mean, I saw recently a property by Menlo Park by the Facebook thing. If people don't know that, Facebook's headquarters in Silicon Valley, the place had burned down. It was still a shell of a shack standing there, but it was sitting on like, I think 3 or 5 acres, and it literally burnt down the building, which you probably would have to demolish to raise to be able to build something here. But because of its proximity to Facebook and because it's in Silicon Valley, it was worth just at least $1 million just as a starting price that they listed it. It probably was going to go for a whole lot more than that. And yeah, I sometimes wonder how sustainable markets like San Francisco are, and how long that can keep going on with stagnant wage growth. So you guys do what's called turnkey real estate investing, right? Let's talk about that so that people can understand what that is and what that means.
So again, it's just a done for you situation. So we have an acquisition team, and we go out and find properties wholesale. I mean, whether we're working with tax sales or distressed properties or absentee owners or whatever the case may be, we're buying really a lot more than one property at a time, obviously. We're buying many properties at a time. We're buying them at wholesale. We're then sending in our crews. We're rehabbing them, and we're rehabbing them to a point where they will inspect well. We bring in a third-party inspector just to prove our work and to make sure that our crews have done a good job, and so the investor can understand they're getting a quality property. And then we place tenants in there, and we get them rented up, and we do all the property management. So turnkey just suggests that, again, it's just that. I mean, the investor really just sits back and collects checks. They really have very little involvement. Maybe, you know, they're going to write a couple of property tax checks a year, and they're going to write one check to their insurance person to insure the property. But essentially, we can take care of everything else. And there's an online portal where they can see all the activity. So again, complete transparency through the entire process. But basically, they're leaning on our expertise. You know, we have all the teams and crews and buyers and, you know, wholesalers and everybody in place, so they don't have to go out and be a real estate expert. And to a certain extent, we've kind of taken a little bit of the opposite strategy of a lot of what you see online, because you know, as we know, as all these online marketers continue to proliferate, everybody is about education and information. And I mean, look, you know, you do a podcast, we do a podcast, right? Like it's there's nothing wrong with the model. I think the model is fantastic, but within the real estate investing world, there's a million gurus out there that are going to teach you how to get rich, right? And they prey on people's, you know, desire to get rich or get rich quick or whatever. And some of them are very good at it, and some of them are legit. I'm not taking anything away from the legit coaches and trainers that are out there, but there's a lot of them out there that also are not legit. Mm-hmm. And so we just said, hey, look, you know, we're not going to be your guru. We're mm-hmm. going to be your expert. We're going to go out there and do all the stuff that we know how to do, and we're going to do it right. And because we're doing a certain amount of volume, because we have the relationships out there, like, for example, we might buy 20 properties at a time from a hedge fund that's trying to unload stuff. We've got relationships with them. And because we're rehabbing 20 or 30 properties at a time and nothing is wasted and the crews are all run at peak efficiency, right? Because we're able to do that, we're able to sell these properties to investors really for no more money than what if they were to do all this stuff themselves.
Yeah.
So there's a huge value add for them in the way that we do things. They just step in, put their cash in, own the deed to the property, and off they go.
And a much lower risk. I mean, becoming a property investor, there's so much stuff you have to know. Not only the mindset, how to deal with, you know, all the pits and valleys that come with it, bad renters, contracts, working with guys that repair the properties. I mean, there's so many things that can go wrong and bad. And certainly, I can see something with your guys' turnkey approach. People can eliminate a lot of that overhead and risk that they might have to do. They don't have to learn all this stuff. They can just simply invest, and away they go and collect their returns.
Yeah, I agree, and I think that it should be noted. I think the biggest challenge, and what a lot of investors don't quite get, is they think it's all about getting the deal on the property. Mm-hmm. And if you think about it in terms of, like, there's a term called buy and hold. So our strategy is, you know, to buy and hold. We want to buy and hold a property for a long time and make cash flow for a very long time. Well, in the linear space of time, the buy happens in the blink of an eye. The money is made on the hold. The money is made over time, renting, day in, day out, taking care of a property, right? So that means that if you think about that, the pressure is all on the management. The pressure is all on the management to manage that property correctly, to get the right renters, to make sure that the renters pay their rent every month, mm-hmm. right? To make sure that the property is looked out for, that, you know, nobody's destroying it, right? To do drive-bys and things like that when big storms come by, make sure everything is okay. Like, it's all about the management. Look, there's a million flippers out there. There's lots of ways you can go buy one property and fix it up or whatever, and that's cool, right? But yeah. Can you get it to perform for 10 or 20 years? That's the issue.
Yep. That's definitely a challenge. So if I'm considering, like, either starting a business or becoming a real estate investor, which is the better investment in your mind?
Well, that's a loaded question, Chris. I mean, that's I think they're both good. I mean, look, I'm a business owner, but I'm also a customer of my own company. So mm-hmm. I don't think they're necessarily too different. They're necessarily the same thing. Now, owning real estate rental property, don't get me wrong, it's a business, but for a lot of people, it's a side business. Mm-hmm. They may have a day job or whatever. They may get to a point where they have a big enough portfolio that can overtake an income their day job, and that's great, and they can get more aggressive about investing afterwards. But in this arena, like I mentioned earlier, a lot of our properties will approximate a double-digit return, cash on cash. Mm-hmm. So can you make more return than that by owning your own business? The answer is yes, absolutely. You certainly can. Can you make less return than that? Yes, you absolutely can, right? Mm-hmm. Can you take a rental property and after 5 or 6 years of enhancement, sell it for 5 or 6 times what you have into it? Probably not. Can you take a business and that's maybe not doing so well, buy it, do better marketing, get better customer strategies, get the numbers up, and sell it for 5 or 6 times what you paid for it? Yes, you can. Mm-hmm. Right. So I feel like the question you're asking to an extent is somewhat apples and oranges. Right. Mm-hmm. And maybe by design to put me on the spot, and that's totally fine. But it's But you understand what I'm saying. If you're going to start, look, I'm a business owner. If you are going to start any kind of a business, number one, you better damn well know what you're doing. Number two, you, in this day and age with a million distractions out there, you better have some damn good marketing, all right? Because there's a huge competition for eyes and ears right now, especially on the internet. And how do you be heard above all the noise? And you better have some commitment to be the best mofo out there on the block and be better than everybody else, because we're in an age, like it or not, of transparency. And people are going to talk, and they're going to put reviews out there, and they're going to open up scam sites and all that kind of stuff if you don't do a good job for them, and you're just going to be exposed. Mm-hmm. So you've got to have that commitment to excellence if you're going to be starting your own business. If you're just going to do it as a hobby. I mean,
99% of most businesses fail within the first 2 years. So sure, there's an element of deep risk in trying to get something to do. You can have a great idea for a business, but whether or not the market or the consumers are going to take and support it or find it, something that they want to take and own, or competitive forces will make it sell out so you can't function as a business, either price-wise or product quality-wise, that you can't compete with. There's a boatload of risk when it comes to starting a business and owning a business. I mean, technically, yes, you're right. I mean, you own a business. I mean, obviously, you probably have your homes in an LLC or some form of corporation filing, corporative filing. But if I was, I guess mainly the question was about, if I was trying to decide which one was better to invest in, real estate investing would be a whole lot safer than just simply investing in real estate, I suppose.
Well, in our case, it's very passive. So, if you're owning or buying an existing business or starting another business, the first question you have to ask is, what's your involvement going to be? Mm-hmm. So, I mean, if you're looking to buy yourself, I mean, you look at the franchise model, you can, leverage your life away and spend 20 years flipping burgers just for the sake that, you say you own a hamburger franchise. Yeah. And, you've bought yourself a, 18-hour day job managing high school kids.
Yeah. We don't want to work because they're millennials. Yeah. In fact, I was recently reading something where the fast food joints and some of the minimum wage sort of places, the first time, summer job sort of places, are having trouble finding workers. So there's that. But yeah, I mean, I've started a lot of companies over my lifetime, and I've seen a lot of them fail because either we didn't apply ourselves because we were investing in other stuff, or sometimes we just gave it enough rope to see if it would hit, and once it didn't hit, we pulled the rope, strangled her.
That's a good strategy in itself, though, because you're just kind of testing the water.
Yeah, and a lot of times we were looking for other things that might work. Some things hit, some things don't, so you test things. But I've seen a lot of businesses fail. There's a lot of knowledge and risk, and of course you have to live that 24 hours a day in starting your own business, where if you're a passive real estate investor, you don't have to be sweating how you're going to make your money or lose your dime every night, as you learn and transverse the business of owning your own company and all that sort of stuff. And employees, don't get me started on that. Employees really helps. So yeah, I like what you guys have to offer with the turnkey business. What's a way that someone can speed up their retirement date using income property?
Well, so we sell, obviously you can imagine at the price points that mm-hmm. we're selling all for cash. Mm-hmm. So we don't really, we don't accept any kind of upfront financing. However, mm-hmm. there's a huge however to that. So let's look at just a typical $50,000 property. It's cash flowing, it's doing well. There are many lenders out there that will allow you to come back and do a cash out refinance of that property after a brief seasoning period. Typically, that's about 6 months or so. So mm-hmm. you plunk your $50K down on one property, we get it stabilized, rented, everything is going great. You go to the lender, you say, hey, I want to do a cash out refi. For the most part, they're going to give you 75% of approximate, let's just say, appraised price or purchase price approximately the same number. So 75% of 50K is what, 37.5? So they're going to loan you 37.5. Now you're able to pull that 37.5 back out. You've only got 12.5 into that property now, but it's still making the same amount of rent. So your cash on cash ROI just went way up on that property. Now you've only got 12.5 into it instead of 50K. The other 37.5 now can be taken and applied to buying your next property much faster than if you had to save up another 50K. Right. So that's what we see a lot of investors are doing that have, they're obviously they're disciplined. I mean, these are not necessarily people that are uber wealthy, right? Like certainly there's no question we have our share of investors, that can write a check for $1 million, no big deal. And they do it. And it's great. And we're happy to have their business. But on the opposite end of the spectrum, we also work with a lot of investors that this is their first time. And they like that we've got the expertise in doing everything for them. They save up that 50K. And because they've got some discipline in their spending habits, they're not spending everything they make out of their salary. They've got a day job and they are able to save up that other 12.5, say in another 8 or 10 months, and boom, they're ready to buy another property. And then another 8 or 10 months later, they're doing another one. And and then they've got a lot of that stuff leveraged. And it's great. They're able to really build themselves a nice big portfolio that way.
Yeah, and the nice thing about the pricing in the area you're talking about of Indiana, you can own a whole lot of multiple homes. Years ago, when I lived in Utah, when I bought my last home before the real estate bust kind of put me out of the market for a while because there wasn't a point to buying anything for a while there. And then I think now I'm settled into being a single guy, so I just enjoy living wherever I want, being a little nomadic. But there was a time where I looked into, I bought my own home. And for the home that I bought, it was very exclusive. It was up in a canyon. I overlooked a giant reservoir behind it. We had our own private lane. It was a beautiful home. It was like 4,000 square feet. And I loved it. But the problem was it was just little old me living there. I think I had a couple girlfriends from time to time that lived there. But for the most part, it was just me. And I remember thinking after a year or two of owning the home, kicking myself, that I really should have, for the price of what I paid for the home, I could have actually bought 4 rental properties at the medium price range in the market. And I could have lived in one myself, since I don't really live that glamorously anyway. I'm single. I'm a single guy. And then I could have rented out the 3 other units for the same price I paid for the home and gotten myself a really good sort of rental income asset owning multiple homes. So I always kick myself for that. But certainly in your market of Indianapolis, people could do that. I mean, like you outlaid and you're down what people have to put down, what they have to finance, and what they have left over. They can certainly buy multiple properties. And certainly that helps with the return on investment for what they're trying to do.
Yeah, I agree with everything you just said. And like you, I'm a single guy too. So, I'm actually redoing a home in Indy right now. That's going to be my primary residence, but it's an older, somewhat historic, whatever, but it's a wreck. This is not anything that's going to be $1 million home. Like by the time I get all said and done, I'm going to maybe have 175 or 200K in it. And it'll be more than nice and plenty good place to bring a date home or anything like that, and it'll be fine. And then I've of course got a portfolio of other rental properties that I own individually outside of what we're doing through our company. And whether my company makes money or not, all my living expenses are covered from the proceeds of that portfolio. So I sleep very, very well at night. And I don't, I'm an average dude. I don't look at myself as this wealthy guy or mogul or any of that stuff. I mean, I go on the bike path. I ride some old crappy 13-year-old bike, and it's just what I like. I don't drive a fancy car. Those are all just things, and I think we get very seduced in the United States by all the marketing and advertising about how, when you have that fancy car or that fancy house, you will have quote unquote arrived. But, you know, all of the, and I know I'm getting off on a tangent here, but I just want to say this. All of the studies that we find on happiness and quantifying what, you know, what happiness really is, it always, always, always is about experiences versus things. So, you know, I'd rather go on a trip. I'd rather go see another country. I'd rather go hang out with my pals in Austin for the weekend, you know, and to me, that's more important than driving the fancy car.
Yeah. I went through my period of buying things that ended up owning me and buying things to impress people that I don't give a shit about. They don't give a shit about me.
Right.
I went through that period too, and realized that I was spending a lot of money to impress people, and they really didn't care when it came down to it. So, I mean, I have beautiful, gorgeous furniture, but now I live in a home. I have Bernhardt, Henry Darn type furniture. Paid a lot of money for it, but it's lasted me over a decade now. And but I live in a very modest home now that I don't have to spend a lot of money to afford. Because I'm on the internet, I'm an internet person. I never go anywhere chasing a family and kids. I never drive anywhere, so there's no reason for me to have expensive cars that sit and rot in my driveway. Yeah, and yeah, I mean, you just have a whole lot more freedom. I mean, there was a point a couple years ago, and it's still on the table, where we were thinking about using the home as a base, maybe renting out some rooms here, and then taking a travel van and going and taking my dogs, going and shooting and taking pictures, and then coming back once or a couple times a month to collect rent and pick up the mail. So yeah, it gives you a lot more freedom than, you know, buying these homes that just get bigger and bigger as you go, and then one day you retire and you downgrade into an apartment or something sized home for you and your wife. Yeah, it's just kind of crazy how people do. You know, as long as they make money, I guess it's okay.
Yeah, I like your idea of the mobile lifestyle. I've always been somewhat intrigued by that too.
I've actually been thinking about just moving to different cities. I've been looking for different cities to move to, and maybe go there for like 1 to 2 years, maybe 3 years, and just kind of experience that city. I moved to California from where I grew up as a kid and spent about, I think, 3 years down there, and said, okay, I've had enough of this. Let's go someplace else. And it's sort of fun to me to go to different cities and kind of experience them, the culture, if they have a culture, like Vegas. I'm not sure what our culture is. I think it's sin.
City of sin, yeah.
It's sin and crack cocaine, I think, pretty much here. I don't know. I'm just kidding. But you know, there's all of that. So let's wrap up, Jeff, and give me the plugs for your website so people can check it out and learn more about who you guys are and what you do.
Yeah, so it's highreturnrealestate.com, you know, spelled just like it sounds. And on that site, we've got links to all of our stuff, including properties that are available for purchase that are in our inventory right now.
Oh, so they can see the properties and
they can see. We sell a lot of stuff, and we're pretty popular. So they don't last on the site very long. We try and mark them as whether there's a pending sale or available or not. But clearly, it's challenging to keep up with that. But every single one of those properties has an inquiry form that you can fill out, and you know, our investor relations team will certainly reach out to you if you want to do a deeper dive into learning more about that property. Then we can send you a whole lot more information than just what's on the site.
Sounds good. Sounds good. Anyway, folks, we certainly appreciate Jeff coming by and sharing some of his details with us. Be sure to check out his website and his podcast. And also take and refer your friends, neighbors, relatives to iTunes, Google Play. Go to youtube.com/Chris Voss. Hit the bell notification button so you get all the notifications. We're going to have more puppy videos going up for the Siberian Husky puppy. She's growing like a weed. I think she's at 4 months now, and she's just cute as a button. So you'll want to see those videos because, God forbid, you should do work during the day. Watch dog videos. They'll make you feel a whole lot better, and it'll piss off your boss. Anyway, guys, thanks for tuning in. We certainly appreciate it. We'll see you guys next time.